And we're joined by Chief Executive Julian Biggins. Julian, good to see you again.
Yeah, it's great to be here. Thank you.
All right, we're just talking about those tough economic conditions, rising interest rates. How's that affected your overall performance?
Yeah, I think pleasingly there's two parts of our business. So with rising interest rates, we've seen an immense sort of demand in private credit, which has really underpinned a strong sort of growth in recurring revenue. So when we think about this result, it was down 12% at the revenue line. There was a very large performance fee last year that we'd accrued, and this year that just hasn't been repeated. But really the recurring revenue has grown to replace that performance fee, and really the quality of the result is very, very strong for the group.
All right, lower transactional activity though, that's obviously been affected, those performance fees and the like?
It's probably, there's two parts of our business that affects the most, and performance fees are obviously cyclical and interest rates do have an impact on that, but also corporate advisory. So in market conditions like this, hard equity markets, it's hard to get deals closed, timing's a bit more uncertain. Interestingly, we have seen a pick up post 30 June, so post record date. There's more interest in M&A, there's transactional evidence, there's ECM deals that are being done. So we are more optimistic about the future around corporate advisory as well.
Record first half gross fund inflows, up 66%. Can you maintain that?
They're nice numbers. I think our track record is very good at growing strong sort of inflows over the last 3 or 4 years. I think 66% is a high hurdle, but we continue to grow the pot. We've raised about 1.25 billion year to date in gross flows. Now, if you look around the market and a lot of managers, they're struggling to raise money full stop. So I think it's a fantastic result. It's a demonstration of the investment we've made in the business over the last 5 years in both domestic distribution and international distribution for that matter. But I think they can grow. We're backing ourselves to grow them.
You talk about international distribution. What is your strategy there? And you recently launched the Marina Fund.
Yep.
Acquired Blue Elephant in the US. And you've also got to focus on Middle East as well.
Yeah, so I think we've obviously got a lot going on in our business, but when we think about the international markets, really it's people that are based offshore, they're diversifying their wealth and they're putting money into Australia, which I think is in a very fortunate position both geographically, but also from a stability of the country. So the MA Marina Fund, again, we're a leading alternatives manager. The Marinas is a transaction that came about because of the interest rate environment. Someone wanted to sell it. We think we've bought a fantastic asset there, and we raised a lot of money in the first half around that. I think it's a real growth engine for the group. And then to the US, foreign expansion is something you've got to be very careful about. So Blue Elephant's a small sort of piece of the puzzle for us. They've got an incredibly good track record, but we also think that we can build a distribution team ultimately in the US to grow into that market as well. So they're small seeds that we're planting, been very good over 15 years, been running, very good at starting new businesses and finding ways to make them successful.
What with that focus in the Middle East there, what are you seeing there, particularly with growth from that high net worth individuals?
Yeah, our Middle East strategy, so we called out appointing an institutional partnership person, Anthony Abyss, through the period. His focus is really on Middle Eastern institutional partnerships. There's still a lot of capital that's looking to be deployed globally. They're looking to do it in partnership models, but also Australia sits very high up in the sort of preferred locations to invest. So, it's very early days for us in terms of that appointment, but we're very hopeful about securing some partnerships out of that part of the world.
All right, your private credit business, you're obviously particularly pleased with the way that's travelling.
Yeah, the private credit business, I think, when you can generate 8 to 10% very stable returns in this market for the retirees or for people that are income focused, it's a very attractive asset class. And we haven't just started the business this year. We've been in it for 6 or 7 years. We've got a very long track record. There's lots of places that we're well known for that product. So I think that can continue to grow. It's 3.3 billion today. 3-4 years ago, it was probably $1 billion or less. We think there's a lot of scope to grow that to be, tens of billions of dollars in time.
Is your strategy in terms of expanding to broaden your diversity, is that the key?
Yeah, I think we've sort of picked our silos. So we often say that we can't be everything to everybody. But, when we think about real estate, private credit, hospitality, these are areas that we have a lot of expertise in. So we operate, we originate the assets. We're not just buying the assets from other people. So it's also, where do you have the skills? Where do you have the edge? Where do you have the capability to make sure that you can protect the investors' money over the long term? And that's really our strategy. We think we also think about macro thematics. So the macro thematic about the ageing population, generating high income returns for those investors over it's less about wealth accumulation, it's more about funding your lifestyle. So there's things that we play into around that. We can't be everything to everybody, And I think the way we've built our business is in a very disciplined way. You can see it over a 15-year journey, and what we have today is very different to what we had 7 years ago when we listed.
And Julian, given your position, I mean, you're very much connected to the investor, the sentiment, also with markets and what's going on at a macro level. How do you see both the Australian and the global economy travelling at the moment, and how that's likely to affect your outlook?
I think you've got to be careful around interest rates. There's still a heap of uncertainty in the, whether it's the domestic market or it's the US market. There's still a lot of uncertainty around which way it will fall. So, I think you invest that way, you protect the downside. You don't always, try to hit the ball over the fence, and that's how we run our business.